Hey folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT methodology and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, very quiet day. This is what's called a hangover day on Wall Street. Anytime you have a holiday weekend like Thanksgiving that stretches into the weekend, or Christmas, New Year's on a weekend, it usually means the following day, that first Monday back, will be slow. Some people aren't back from their vacations with their families. Other people are just taking it easy, kind of maybe a little bit lethargic after all that turkey and so forth. So again, volume today extremely light. The markets are trading down slightly, but notice how tight the range has been. Early in the day, you had a little bit of a gap down, sideways maneuvering, drop to the 50, and then since then it's gone up, and the market has basically been in a 10-cent range over the last hour. All right, the reason why you had a little bit of a gap down today, in my opinion, is because you had this massive surge on Friday afternoon. So remember, the markets on Friday closed at 1 p.m. Eastern time, and just before that, the last hour of the day, that day, you had this short squeeze. And so basically the markets are negating that as if the short squeeze never occurred, bringing back to an equilibrium level. And that's this key level. Notice how this is where the markets were trading prior to that short squeeze on Friday, and that's exactly where the markets are trading currently. So again, that's what we're seeing. The spider is down about 70 cents, but really just negating that move up from Friday late in the day. The S&P 500 down 7 points, NASDAQ basically flat on the day as Apple leads the charge there, and the Dow Jones Industrial Average down about 78 to 79 points. Now, the key here is this, folks. I knew the rally was coming last week. We positioned ourselves inside the research center at InTheMoneyStocks.com that way, and that's a research center geared towards investors and swing traders. All of our members piled in plays like Apple, like Baidu, like Chevron, you name it. We just profited left and right. But again, going into this week after Friday, I pared my positions down slightly because I think that the market probably is going to start to worry about this fiscal cliff again. Again, the fiscal cliff coming to a point at the end of this month, or at the end of December, I should say, as we're just about into December. And unless that gets solved, unless there's some resolution between Democrats and Republicans, the market will continue to be a little nervous ahead of that. So we had such huge gains last week. If I zoom out on the charts here, you can clearly see again from the low pivot at the 134 and change level all the way up to about 142 high towards the end of Friday. It makes sense that the markets could be a little bit in a stalemate or a sideways consolidation pattern with a small pullback. Now, the one positive out there today, well, there's a couple stocks that are up, mostly in the tech sector, but one of them is Apple. Apple surging up over $16 today. What a beautiful move here. Nice bullish consolidation here, which tells us it could go a little bit higher as well, maybe into tomorrow. This stock, with my members inside the research center, I am still holding long. So this is a beautiful one. I figured the reason why Apple, you figure, is one of the ones that you don't want to pare back just yet is because not only was it so oversold recently, but you had this beautiful bottoming tail, and you really hadn't gone, after a close on Friday above the 20 MA, you hadn't hit resistance yet. And the resistance point is going to be around the $600 level, 595 to 600 here. That's going to be the 200. That's where I think Apple's going to go. So I held on to my Apple shares, and sure enough, being rewarded here dramatically with about a 16 to 17 point increase there. So that's great news. Looking at a couple of the other ones I'm holding, they're basically holding their own today after massive gains last week. I took a bunch of trades off the table, including MCP, Molycorp for 27% on Friday as well. That was a great move there. Again, banking 27% on MCP in a matter of a 1 week period. I also took IBM off the table, and that was a good choice as well. IBM is down about $1 today, and I basically sold it right around the highs on Friday, which was perfect. So again, bottom line is my projections out going into the next few days. Market's going to chop around here. There may be a minor amount of upside left, but I'd be very, very cautious. I don't think I'd be initiating new longs right now. What I'd be doing is just holding on to a couple remaining positions out there that you have just in case you do get a little bit more upside. And then once the market pulls back off the fiscal cliff worry, when everyone starts getting bearish again, that's when you'll want to start to accumulate, and that is what I will use the PPT methodology here at InTheMoneyStocks.com themoneystock.com to do and alert my members accordingly. Now, if you're interested, folks, remember there's a 7-day free trial here at themoneystocks.com. Come to In the Money Stocks, sign up, take the 7-day free trial, find out what this PPT methodology is. Essentially, PPT methodology is a strategic proprietary methodology that allows you to be on the right side of any stock chart, market, currency, commodity. Doesn't matter. As long as it has a chart, the PPT methods tell you how to position yourself. All right, institutions want it. We get buyout offers left and right, everything like that. You just want to be there fighting for the upside in any trade, whether it's to being on the short side and making money or on the long side and making money. PPT methodology gets you on the right side. All right, before we end up not being able to teach it anymore, you want to come learn it, take that 7-day free trial in the Research Center, and profit with the pros. Take care, guys. I'm getting back to trading, make some money this afternoon, and I will talk to you soon.